We had seen what Vistra Corp and nuclear stocks, UCLA or Okla, Sam Altman's company, have done fantastically well the last few years. What is the what does the input look like here? Talk to us about the energy demand that we are going to need to unlock. We're talking about these 5 gigawatt data centers that Zuckerberg is talking about. That's not the only one. There's going to be multiple of these from multiple companies. The energy demand is going to be absolutely phenomenal. And China very much is outpacing the US. I think I saw a statistic that they're adding a US's worth of energy consumption every 18 months. And that's probably accelerating with some of their work, like the new dam that they're working on, and other nuclear facilities that they're approving. So energy, this is not a new thesis that we should be investing in energy to power AI. What I'm curious in is where are the opportunities that we see them? Because so far it's been absent from the portfolio.
Yeah, you think about this new Cold War, this great strategic game where people play to their strengths. The U.S. strength is, along with the Western nations, as we've talked about, it's not just the U.S., an existing technology leadership. It's probably the most dominant industry for this, not only in the U.S., but its allies. China's key advantage right now is likely boils down to power. What was their solution in the absence of NVIDIA chips? Well, they were going to have chips from Huawei, which were horribly inefficient from a power perspective. But if you've got enough excess power, you don't need to really worry about your efficiency. And the greatest weakness of not only the US, but also a lot of its allies, especially in Europe, is an inability to build more of this needed power supply. Yeah. So this is going to be the flashpoint.
A regulatory inability. I do want to be clear. We know domestically the U.S. and Europe absolutely have the ability to build nuclear reactors and solar farms and turbines. And France, famously powered by a lot of nuclear energy. It has so far been a regulatory inability. It is a willingness, not a technical limitation.
Yeah, and this is an endorsement of the Trump administration. Again, we are apolitical on the show, but if you're excited about them and you're a tech investor, at the top of the list of reasons why you'd be excited definitely had to be the regulatory reform in power. This is unlocking one of the most strategic areas. And the energy secretary for the Trump administration this week said the coming years will be huge in nuclear. Austin, this isn't a space that we've invested in. There's been a lot of frothy stocks, very expensive. But I think we probably do need to put more research into it. I believe in the third episode we ever did in the podcast, we did a deep dive on this energy issue. We ended up buying more of the data center, companies powering a lot of the electrical supplies into them, which have done fine, but not the returns you talked about with stocks like GE Vernova that do things like gas turbines. And just today, news was breaking as we went to film this. Trump's in Pennsylvania, trumpeting some massive infrastructure projects. And so when we look at ways to kind of skin the cat on this opportunity, there's going to be opportunities in energy itself. There's going to be opportunities across that entire supply chain. As you noted, there are the actual power companies, which some are more advantaged than others. There are things like the turbines for the, getting power to the data centers themselves. And there's going to be areas like who finances how expensive this stuff is. I believe Blackstone is financing $25 billion for the project announced today. One stock, we've been looking at, I had just done a presentation on this to Motley Fool members, was Brookfield, which, as you had noted, is like a rushing nesting doll. But one of their assets, Brookfield Asset Management, does massive deals for power. They actually have direct exposure to data centers. So, this might be a place that, as we noted, with stocks at all-time highs, maybe we will look at adding some private equity, companies to the portfolio, because it is getting so expensive to finance these areas that a very limited amount of companies can, play in this area, and it's lucrative. The other area that's really interesting, this kind of great battle going on between the US and China. Earlier, I'd mentioned H20's availability being apparently relying on a deal for rare earth minerals. Well, there's a single stock that has a rare earth mine in the United States. That's MP Minerals. And what's happened to them in recent weeks? the Department of the Defense has become their largest shareholder in a multi-billion-dollar deal, and Apple even directly invests in them to get domestic supply. So MP, it's become the story stock in many ways of 2025, and this is another area that we're going to look at. And as a little spoiler, if robotics take off, there's an incredible amount of rare earth materials in the robotic supply chain. So I don't think this is necessarily a storyline that's just ending with AI. So Austin, I know I'm throwing out a ton of investing ideas, and we're gonna get to selling off and rebuying, but it's really, hopefully this is illustrating how deep the well is on opportunities that are going to benefit as this massive spending wave continues to form.
I love that. And I do want to, just take that point and extend it for our listeners here, which is our portfolio is fully allocated. That does not mean the ideas are going to stop coming. So just some of the things that you and I have talked about in these last few episodes that are huge opportunities that, where more research needs to be done before we place investments. But there's healthcare, there's robotics, there's agentic AI, there's power, there's more data center exposure. So these are all potential opportunities. We're not saying go put money in them now. That's where you need to go do the research and find the companies and understand the trends as they're well positioned. But just like when you're investing in internet stocks at the dawn of the internet, it wasn't just buy Amazon or buy eBay or Oracle at the beginning. Because those were the best stocks available at the time. Now, granted, you would have done exceptionally well, but along the way, as the industry matured and new capabilities came online, you could have invested in Uber, you could have invested in these other companies that were enabled from this tech layer of connectivity. And we are going to see that in AI as well. New opportunities are going to be presenting themselves that are more compelling than the opportunities you've already allocated to. So at some point, our listeners should expect we're going to be selling positions to reallocate into these new areas